Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the S&P 500 futures contract. And there we go. Not sure why it wasn't coming up, but we're looking at a last print of 997 in the front month contract. Kind of a quiet day on this Wednesday, the 2nd of September, after yesterday's wild moves to open up the September session. The month of September should be a great month. We're anticipating a great month. Had some pretty good trades yesterday, particularly on our dual day trader ES, the very popular dual day trader ES, probably because the reason for the popularity is it's only $5,000 to get started. Only $500 is all you have to pay for 3 full months of trade, and you can essentially leverage the outstanding performance of that portfolio. So if you have $25,000, you could trade 2, 3, 4, 5 units of the product. So it's one of our most successful portfolios, and again had some great trades yesterday. But where are we now? These are intraday dynamics. This is what we use to kind of gauge where the market's going. These are proprietary indicators. As you can see, it's kind of a quiet day, hovering very close to the zero line in most of our indicators, essentially, and as well price, of course, hovering near the unchanged mark, just up a couple ticks on the session at 997. But as you can see, we'll actually go back. This is Wednesday, Tuesday, and Monday. And we can go back to last Friday, Thursday. Let's just go on back here. As you can see, we had some nice bullishness here, but kind of a mixed picture. And as you can see, just really the market wasn't going to be able to go anywhere. As you can see, we had bearishness here, extreme bearishness, bearish, bearish. So I had a quadruple threat bearish bias under the trend. That would lead to a market sell-off on the opening of the prior or the following session, which happened to be the 27th or last Thursday. Had a nice knife-like move to the lows, penetrated the lows of the prior few days actually, but just wasn't able to hold, actually reclaim the trend. But it was a bit of a fake out because, as you can see, we had full and extreme bearishness, relatively extreme bearishness here and here as well. We did get a little bullishness, a little bit of a divergence here late in the day, but it would just simply lead to a bull trap and a retest of the prior high there, right around 1040. In the market, a bull trap. They came down, retested it, broke below the highs, just broke below the trend, and it was just going to be all there. We did have a divergence here to the negative side, full bullishness there, but as you can see, below the trend, a quadruple bias saved this market or this indicator right here to the downside. What would that do? That would lead to even further selling on the day following, and then all bets were off for the bulls. As you can see, accelerating bearishness here on this day, full bearishness, full bearish, bearish, a little bit of divergence there, but nothing to worry about. To be sure, close at the bearish side of the day. Another bull trap. They tried to run them early in the session, but just knifed right through the trend. Again, continuation, accelerating in bearishness right here. Just impressive moves. 1025, we'll call it 1020 down to 995 was the close there. And we're just kind of digesting those gains here today. This, of course, was Tuesday. TAT, a turnaround Tuesday, but essentially was a continuation of the already prevalent bearishness in the market. So that's where the intraday dynamics are. On the daily chart, we do still remain officially bullish as we move back to bullish over 960 following a neutrality stance around 930, following a switch to bullish around 800. So 130 point gain there, essentially scratched there. We're sitting on another 30 or 40 gain points now. So about 150 or so point gain in discretionary from a discretionary bias since March. So nice little gain there, but considering we have seen a continuation ET sell signal right there, essentially an outside bar reversal, one could argue, and full short-term bearishness. Price technical bearishness, short-term trend following bearishness, really just expecting, as we had mentioned before, we wanted a pullback to around 950 to 960, our key level where we switched back to bullish. Didn't quite get it there. The market continued to blast higher, but it really essentially stalled. So hopefully this doesn't prove to be a fake out breakout on the daily chart right here, and we do continue on higher. but we're simply pulling back as we need for more buyers. Now, the worst case scenario will be pull back to around 975, 970, come up, print another shoulder for a head and shoulders formation around 1015 to 1010. We won't like to see that because that certainly will pretend the obligatory fall sell off in September and October. But it will just present another opportunity to make some nice gains on the short side from our trading perspectives, and then we can all add to our long-term positions on the pullback for the anticipated nice rally into the year-end close. We do expect a nice 4 or 5 months to finish out the year from a trading perspective, and a nice bull run in the latter half of the year. But right now, as you can see, we remain officially bullish. Should we get back below 950, this will break and we move back to neutrality for the time being. But as you can see, short-term bearish is the case here amidst this extreme divergence. Once we had a new high there and not even able to muster a histogram bar above the zero line here, really suggested that the market was likely to sell off. So all kinds of indications that yesterday's sell-off was going to occur, and in fact it did occur. So that's where we stand right now. Full neutrality in terms of directional movement. Actually, the take your long profit signal that we got right here, close at 10.1048, is now 10 points to the plus. So taking the profits right there. But as you can see, we'll run the nice little trade yesterday. Kind of a scratch trade there. Essentially, a little bit of a winner there. Slightly larger loss, but a beautiful trade. Yesterday for one half of the dual day trader ES, 1055 down to 1005, I'm sorry, down to 995 almost. So a nice 10-point gain there for the market. And we're going to go ahead and look over and see where we've been recently. Like I said, it's been kind of quiet right there. As you can see, a 4-day performance of our portfolios. The MAPDT, we actually mentioned to our clients last Wednesday or Thursday, that it was a great time to get involved, to put some capital to work, because we had like 3 days of losing sessions. We had 4 incredible days a couple of weeks ago in the portfolios. As you can see, a 42% gain, but then we had a correction the next 3 days and took away, I don't know, maybe 20% of the move. Actually, we'll just say 15%. Actually, about 20%, because we did, I don't know exactly. 17% is where we're at right now for the last 4 days, but we did mention it was a great time to put some more capital work. And of course, the venerable MAPDT original portfolio gains a quick 20%. Actually, we've given back 3% since then on Monday and Tuesday. Monday's gains aren't, Monday actually was a loss for the portfolio, about 3 or 4%. I think we lost on Monday. But as you can see, over time, 42% over the last 11 days for the venerable MAPDT, and the dual day trader ES, aforementioned, up 25%. We are running out of time. So let's go ahead and just look at our new performance tables. We get all kinds of questions. You know, you guys have a lot of portfolios. Well, here we've ranked them. Actually, you can click, this is the home page, and it's right there on the home page, or you can go to 2009 portfolio returns in the menu. You can go to click here for our portfolio returns right here. We get a lot of questions on individual products. They may not be fully updated, but all of our portfolio returns are updated here, 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 and we'll go ahead and click right here. And this has actually a link, a little link that you can use to subscribe to the portfolios. Now this one's ranked based on the highest reward to risk ratio. MAPDT 150 and MAPDT 4.0 obviously are some of our better portfolios, but you know, this one is one of our most popular portfolios, MAPDT version 4.0 HR. And as you can see why, a reward to risk ratio of almost 17. And of course, all these portfolios use $26 for every round turn for slippage and commissions. So you can kind of peruse this. As you can see, MAPDT version 4.0 HR coming in at the highest total monthly return, and actually coming in not coming in the lowest drawdown, because it is HR, meaning high risk. But right now, if you're interested in these portfolios, you can go ahead and click here, and you can add to your cart $2,500. You can save 25% on any MAPDT right now. Just enter promo code video. Go to the website, chat with the support team live. That should be working, so we'll fix that later. Save 20%, and shoot us an email to admin@MiniAnalyst.com if you have any other additional questions, and we'll see you next time.